And we're talking about like the Trump administration also, and just wanted to touch base on a couple of pointers which recently happened. So US is talking about imposing a 5% tax on money remitted to other countries, and that can be like a huge hit for India because like the world's biggest recipient of remittances is like totaling about $120 billion a year. So what is basically the impact of this on India according to you, and why do you think like these things are happening in the ecosystem?
So, so let's take a step back and look at the global monetary system. See, every country needs to have its own currency. I mean, you can think about an international currency and all that. It will be impossible to manage. Maybe at some point in the future we can get to that, but not now. So every country needs to have its currency. Now, how do you decide the exchange rates? Till I would say the 1930s, every currency was pegged to gold. So the value of your currency was dependent on how much gold you had as a country. 1930s में जब Great Depression हुआ, some people think that Smoot-Hawley and the bank failures in the US were the catalyst. Most likely they were. But around that time, everyone started breaking the peg to gold. And in that decade, it's a scary chart. Most currencies depreciated by 50 to 250% against gold. So a lot of it was competitive devaluation. कि किसी ने 20 किया तो फिर दूसरे बोला अरे उसने 20 किया मैं 25 कर देता हूँ. And then he said, तूने 25 किया मैं 20 और कर देता हूँ. And so all of that was happening. And I think the world realized that this was not productive. So we needed to have a stable monetary system. Now, of course, then wars happened, 39 to 45. So around the time that it was clear that the Germans were losing, work started on a new global monetary order. Now, what the US was the only dominant power at that time. So John Maynard Keynes, who was a very deep thinker, so he actually 1941 onwards, he withdrew to his country home and to think about a new monetary architecture. He promoted a new international currency and a new system. But he was with Britain. And frankly, if you reimagine 1945, so there's no Germany, there's no Japan, there is no Italy, there's no India and China because we were still colonies or Chinese were still fighting the Civil War. And the UK was almost like a supplicant country to the US because it had been bombed out of hell, out to non-existence by the Germans, and the only reason they survived was because the Americans were supplying them tanks and aircraft and all that. So they had no say basically. So the Americans then got away with a currency system where you have the dollar at the center. Every currency is connected to the dollar, and the dollar is then pegged to gold. So they said $35 per ounce. So we will not. So they also took responsibility that we will not be irresponsible. Now, why do you need this structure? Because, and it's simple arithmetic. So if you take, say, 30 currencies, 30 major currencies of the world, and these account for 95% plus of global GDP, so that's good enough. If you have to have liquid exchange rates, so as you know in finance, there's a bid-ask spread. So basically, the buyer, bids for something and the seller asks for something. There's always a spread between the two. In illiquid markets like real estate, it's a very wide spread, and liquid markets, it's a very narrow spread. You need a narrow spread for people to be able to trade. So you need to keep a very liquid exchange rate. Now, if you have 30 currencies, it is NC2. So basically, you have to combine them. So basically, hundreds of exchange rates are needed to be kept liquid. If, on the other hand, if you keep the dollar in the center and you do a hub and spoke, so every currency has a liquid exchange rate against the dollar. So if I have to go from, say, rupee to pound, I go from rupee to dollar, dollar to pound, and both are liquid. So my bid-ask spread is in check. So it is economically efficient. So which is why it is important to have that system, which is the whole role of a reserve currency. Now, the dollar became the reserve currency because the US was the only dominant power. The problem is that if there is a country that provides a reserve currency, it must run a current account deficit. Now, a current account deficit means that a country is consuming more than it produces. Because suppose I have to accumulate dollars and you are the US. Now, I have to provide you some good or service so that I get the dollars, because I want to signal to everyone, देखो मैं बहुत strong हूँ, मेरे पास इतने dollars हैं. So the US is running a current account deficit, which is why they're able to sort of give me the dollars. Now, over a period of time, as you can imagine, this indebtedness builds up. So the first sign of this, for the first breakdown that happened on this system was 1971, when Nixon was the president then, decided to shock the world and said, the dollar is no longer backed by gold. Because उनके इतने फॉरेन लाइबिलिटीज अक्यूमुलेट हो गए थे कि उनको लगा कि अगर लोगों ने सच में आके डॉलर मांग लिए तो हमें कंगाल हो जाएंगे. तो इसीलिए उन्होंने कहा कि भाई अब हम पेन नहीं कर रहे हैं. इट वॉज अ डिफॉल्ट. एंड आफ्टर दैट द डॉलर फेल बाय 38%. द ट्रेड वेटेड डॉलर फेल बाय 38%. फिर 6-7 साल तक फ्रीली फ्लोटिंग करेंसीज चल रही थी. उसके बाद पॉल वोल्कर जी, जो हु वाज पार्ट ऑफ द team that did the default in 71. So he was the Under Secretary of Treasury at that time. He was a part of the 15 people who went to Camp David and decided that, you know what, don't have to check with anyone, don't even tell our allies, just say that we are no longer backing our dollar with gold. The same gentleman, when he became the Fed governor, famously hiked rates, brought credibility back to the dollar, and the dollar again became the reserve currency. But because he had hiked rates so much, the dollar again appreciated. 85 में they went and said, देखिए भाई, ये बहुत ज़्यादा हो गया, अभी डॉलर का वैल्यू कम करना है. Now, the convenient thing in 71 and 85 was that the countries that you wanted to devalue against were pretty much countries that you were providing military support to. So the US had and has military bases in Japan, in Germany, in a lot of these countries, Saudi Arabia. They said, please, pretty please, but the fact is that there are military bases there, so that please also comes with iron hand in a velvet glove. So मान गए वो लोग. So the yen very famously appreciated by 40%. Over the last 54 years, the US has continued to run a current account deficit. So their international liabilities have kept growing. Today, the US owes the world, or today meaning as of December 2024, which is the last data we have, the US owes the world $62 trillion. It owns $34 trillion of assets. So the net international investment position is minus $28 trillion, which is minus 90% of GDP. If you draw this chart, you will notice that till 2012, it was only minus 20%. It fell to minus 40 by 2018 and then minus 90 by 2024. Now, the reason why this happened, if you remember the fiscal deficit question I was talking about, till the time that they were disciplined with their fiscal, the world was very happy buying their treasuries. कि अगर डॉलर कलेक्ट ही करना है तो ये सेफ है, ये मतलब ये यूएस गवर्नमेंट बॉन्ड्स जो हैं वो बहुत सेफ है. But the moment you start spending like mad and your debt to GDP goes to a ridiculous level, obviously people become less comfortable owning your treasuries. And therefore they start owning your equities. उनको डॉलर तो खरीदने हैं तो उनको लग रहा है कि यार यूएस कंपनीज को खरीद लेते हैं, का स्टॉक खरीद लेते हैं. So now we have reached a level where it is unsustainable. If you see the chart, it is like plummeting. So now the US is saying, well, एक तो dollar has appreciated because dollar is now at the same level where it was in 71, in 85, and now needs to fall. Otherwise, we are completely uncompetitive. So now they are caught in a bind because the dollar is so expensive or so overvalued that their manufacturers, their service providers cannot compete. Now they need to arm twist people, put a gun to the head or beg and plead and say, please let the dollar fall in value. So this is part of the reason. They've not explicitly stated it. They actually officially deny it sometimes. But when you see why did they have to put reciprocal duties or tariffs on allies, you realize that most of the $62 trillion is to allies. So today's headlines were that UK now owns more US treasuries than the Chinese. Taiwan owns $1.7 trillion. So if you add UK, Europe, Scandinavia, assuming they're not part of the European Union, West Asia, then go further to Korea, Taiwan, Japan, it's all their allies. And so the dollar needs to fall in value against some of these large trading currencies. Frankly, India is not that important yet. So, I mean, it's very unlikely that we'll be forced to, appreciate by 30% against the dollar. But I don't think we'll be allowed to depreciate against the dollar, because then it will be a double benefit for India. Now, the biggest challenge in all of this analysis and this prognostication is that we have a new beast this time, which didn't exist in 71 and 85, which is China. Now, China is not, because this is a default. So first you say that I'm the reserve currency of the world, architect the whole system around me, and then you build up a lot of deficits, you spend like mad, and then once things are going out of control, you say, you know what, devalue the dollar. It is like a default. So if the dollar falls by 30%, it is like a default of 30%. So now it is not that countries that accepted this in 71 and 85 didn't see it, but they didn't have an option. China has an option. So China will negotiate, which is where I think the China-US negotiation becomes so important. So if the Chinese also, because frankly, for the world to be stable, and it's in everyone's interest for the world to be stable, if we allow the dollar to say, forget 30%, say 25% also, and the US equity markets correct a bit, the net international investment position becomes much more manageable in the US. So, and then the whole cycle can restart again. But anyway, we'll see how the new system comes up. But this is the background to it. So it was a longish answer, but hopefully it clarifies where we are. And this is not something that I expect to happen in the next 3 months. In fact, it is quite possible the dollar may appreciate in the next 3 months. But if you're thinking 3 to 5 years, I think it is a reasonable expectation that the dollar will be down sharply.
And about the tax, which is like being remitted and all.
So part of this dollar devaluation tactic, or the desire to devalue the dollar. See, the US also realizes that the economy, or at least the global economy, is now much, much more complex than it was in 71 and 85. And they have to find ways to not attract capital. So what they are starting to do is, find ways that you say, oh, you know what? If you hold dollars outside India, I will tax you. If foreigners want to come and buy our assets, we will tax you. Now, sometimes the way the markets work, just the fear of this, just the threat of this will devalue the dollar. But frankly, I'm not sure that it's really going to work. And this one is more of a proposal. I doubt that it's something like that is going to happen.
Got it.
If you learned something new from this video, do share it with your friends and subscribe to this channel so that we can bring you the best content possible. Also, if you want to watch this entire episode, click on the link in the description box and you can go to Kushal Lodha YouTube channel and watch the entire podcast episode. Thank you so much for watching this and have an amazing day.